So we are completely at a loss to understand what is the basis for rejecting.
Marginal relief for Jindal Steel and Power. The Delhi High Court issues a notice to the government asking why the company's winning bids for 2 blocks have been cancelled. Coal India steps in as the custodian of the Garre Palma blocks. The JSPL stock ends over 6% lower.
The government may allow the land ordinance to lapse on the 4th of April. Sources tell Network 18 the government is mulling fresh amendments in the land bill and may look at reintroducing a diluted version of the consent clause.
The government announces a 3.6 lakh crore rupee borrowing program for the first half of the next fiscal year. Will issue long-term bonds of 40-year tenure for the first time ever. Finance Secretary Rajiv Mehrishi says the government is confident of meeting all its fiscal targets for FY16.
The Supreme Court throws Sahara a lifeline, allows the group 90 days to raise funds and secure bail for its founder Subrata Roy. Apart from 3 foreign properties, the court allows sale of 10 domestic properties, including a land parcel in Ambi Valley.
The race to head the State Finance Minister's panel on goods and services tax heats up. Andhra Pradesh Finance Minister enters the fray, even as the Gujarat Finance Minister Saurabh Patel continues to be the front-runner. That's a CNBC TV 18 exclusive.
The MPID court grants bail to 3 brokers arrested in connection with the NSCL scam. Amit Rathi, CP Krishnan and Chintan Modi released on a 20 lakh crore rupees bank surety.
Dalal Street begins the week on a weak note. The benchmark indices trade in a narrow band before closing in the red. The Sensex loses 70 points while the Nifty is down 20. The mid-caps fare the worst with a 1% cut.
The government finalizes norms for International Financial Services Centre, notification to be issued by the RBI shortly. But Finance Ministry sources say the international financial zones will not enjoy the same tax benefits as SEZs and nothing more.
India is already struggling. Rural economies hit hard by the unseasonal rains leading to crop damage. A ground report from what is infamously called the farmer suicide capital of India, Yavatmal in Vidarbha, coming up on the show.
For the first time in Indian business history, by being a part of a huge nationwide campaign, the people of the nation have selected India's top 15 business icons. Let's salute India's greatest leaders, trailblazers, radicals. Manyavar presents CNBC TV 18's Indian business icon, leaders, trailblazers, radicals.
A CNBC TV 18 special initiative. It started on the 9th of January with a bid to find India's top 15 biggest business icons. Has received a tremendous response from you, our viewers. We've got almost 2 million votes from 128 countries. There are 15 top business icons that have been selected to form a distinct league of the most powerful leaders of India Inc. Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. Hi, Surbi. Good to have you on the show.
Yes, Shireen, well, lots happening. I guess we'll start with the day's trading highlights.
Absolutely. Let's start with the day's market action. Didn't look very good. It's been a quiet start to the week on the Dalal Street. Bulls back on the back foot yet again as benchmark indices traded in a tight range pretty much through the day. By the close of trade, the Sensex was down by about 70 points, going home below 28,200. And once again, the fall really getting exacerbated towards the end of the trading session. The Nifty lost about 20 points in the process. But the big blow today coming in on the mid-cap, and the index was under pressure through the day and saw a cut of about 1% or so. But one of the stocks that was in the news created headlines through the day today. Jindal Steel's tussle with the government over its bid for cancelled coal blocks has begun to hurt the company. The stock closing a sharp 6% lower after the government cancelled the company's bid for the Garre Palma blocks and the Tara coal block and transferred the Garre Palma blocks to Coal India. Jindal Steel moved the Delhi High Court today in this regard, and the court has restrained the government from transferring the Tara coal block to Coal India. Speaking to CNBC TV 18 this morning, before the company had got the interim relief from the court, Ravi Uppal of JSPL had said they maintained that their bids were very competitive and that the government's decision to cancel their bids had taken them by shock.
Well, we did get a communication from the government on Saturday morning saying that our bids have not been accepted by them. It has come to us as a shocker because we thought we have put in bids which are very competitive and they bring a lot of value to the government, both at the central level as well as the state level. So we are completely at a loss to understand what is the basis for rejecting.
Well, that's Ravi Uppal there of JSPL, the stock ending over 6% lower. Ashmit, who's been tracking that story, joins us now with the details. Ashmit, marginal relief for JSPL. The court will now hear this matter again on the 26th of March. What was the argument of the government and what did the court have to say?
Well, JSPL had moved the Delhi High Court this morning, and the concern, as we had heard just now, the concern that JSPL had raised was that there was no reasoning offered by the government for cancellation of blocks. Also, the bid that they had submitted was in fact consistent, was in fact credible, was consistent, and hence should have been credited by the government. The government, on its part, however, gave a two-point response. One, it said that the JSPL bids were lower and was then an outlier to the broader trend that was observed with respect to the auctions won. The second point that they raised was that the bidding process hasn't concluded officially and that no vested rights have been created as far as JSPL is concerned. So at this point, as per the government, they're completely within their rights to go ahead and to terminate the auctions, cancel the blocks as seen so far. Now, importantly, just hours after the petition was in fact filed in the Delhi High Court, we saw a move by the government to allocate Garepalma 4x2 and 4x3 to Coal India. Now, this was something that in fact drew the court's attention. The court said that number one, blocks that have been reserved for allocation by way of auctions cannot now be allotted to PSUs. The Delhi High Court also held that an explanation must be rendered by the government as to why the blocks were cancelled in the first place. Now, towards that end, Delhi High Court has sided with the JSPL and given marginal relief, at least with respect to Tara block. It has restrained the government from going ahead and allotting it to Coal India. Furthermore, with respect to 4x2 and 4x3 Garepalma, Delhi High Court has sought explanations from the government, which we understand will come in the next couple of days, and more clarity on 26th. That's when Delhi High Court takes up this appeal for further hearing.
All right, Ashmit, stay right there. Ashmit's tracking yet another story for us tonight, and we'll come right back to that. But in the meantime, brokerages are treading quite cautiously when it comes to the JSPL stock. Nigel D'Souza is standing by with the wrap of the various brokerage views surrounding the cancellation of bids that occurred over the weekend. Nigel, what's the word on the street?
Well, JSPL was the stock in focus in today's trading session. It opened down by close around 10%. It was down even 14% intraday, but it recovered a goodish bit from the lows of the day to end with a cut of around 7%. That's on the back of news that the government had gone ahead and cancelled various coal blocks that the company had won in the Schedule 2 as well as the Schedule 3 coal block auctions. In Schedule 2, remember, they backed the Garepalma 4, 2 and 3 coal blocks at a negative bidding price of 108 rupees per ton. And in Schedule 3, they backed the Tara coal block at a negative bidding price of around 126 rupees per ton. Now, brokerages came out with their notes today, and City for one, they were factoring in the worst case scenario. They were assuming that any which ways JSPL will have to get their coal via the e-auction or via the import route, and the blended cost of fuel that they had factored in was around 2 rupees 17 paisa per unit and 2 rupees 40 paisa per unit for the next couple of years. They say even the worst case scenario, the blended cost of their fuel shouldn't go beyond these rates, so they're already factored in the worst. Morgan Stanley, though, they say that for post these cancellation, the possibility of earnings as well as EBITDA cuts, that really comes about. And they say that since JSPL cannot source any of its coal via captive sources at present, it could increase the coal cost by nearly around 20 to around 25%, while the EBITDA could take a hit of around 15 to around 78%. They say that JSPL could go ahead and in fact bid for the Utkal B1 as well as B2 coal blocks, but those blocks are much smaller than these blocks where the bids have been rejected. Kotak, they have suspended coverage on the company. They've assumed 3 cases. In all 3 cases, they have assumed that in fact the steel business will get its coal requirement via the e-auction route or via the import route. Now, for the power business, they have assumed three various scenarios. Scenario 1, they state that the power business, the entire 3,400 megawatts, will get its coal via the e-auction route. If that is the case, then their EPS for FY17 will be at around 20 rupees per share. Scenario 2, they're saying that maybe 2,200 megawatts of their power plant will get its coal via the e-auction route, and the remaining 1,200 megawatts of their power plant will get its coal via the linkage coal. If that scenario plays out, then they say that in fact the FY17 EPS should be at around 24 rupees per share. And finally, they say suppose JSPL's power plants, they get around 1,200 megawatts is fed with linkage coal, and the remaining 2,400 megawatts is fed via captive sources, then the EPS could balloon up to around 31 rupees and 50 paise per share.
All right, Nigel, thanks very much. As you can see, everyone's painting different scenarios at this point in time, awaiting clarity from the government. We could hear more on this story on the 26th of March. That's when the court will take up this matter again. But for today, the stock under pressure, once more down by about 6%. But Ashmit, coming back to you, you were also tracking the Sahara case in the Supreme Court. The court has now given the beleaguered group a 3-month breather to try and sell assets and raise funds to bail out Sahara chief Subrata Roy. Tell us more about what transpired in court today and what Sahara has offered to the court.
Well, at this point, in light of the latest proposal by Sahara, the Supreme Court following a carrot and a stick strategy, here's the carrot. As far as Sahara is concerned, it came out with a two-part proposal. In the first part, it says that the Spanish bank will be extending a credit line of $975 million to be precise, of which $850 will be used to settle the Bank of China loan, which leaves Sahara with $125 million, which in turn will be used for bailing out Subrata Roy and submitting to SEBI. The second part, part two of their proposal, was that HSBC will be extending a bank guarantee to the extent of $850 million, which would be sufficient for the 5,000 crore rupee bank guarantee component of the 10,000 crore rupee bail. Now, the Supreme Court observed that prima facie this looked like a serious effort, looked like a credible effort, and towards that end, here's the carrot. The Supreme Court said, go ahead, we're giving you 3 months, but that's the window that Sahara has been granted, has been allowed. Along with that, they've also been allowed facilities in Tihar jail for Subrata Roy for negotiating these deals towards achieving finality. But here's the stick. The Supreme Court giving out a very clear ultimatum that this is the last opportunity, failing which the Supreme Court will go ahead, appoint a receiver, and suo motu will go ahead and sell the assets of Sahara for realizing the total funds. Now, of course, in associated developments, the Supreme Court has also allowed Sahara to raise funds by way of selling a land parcel, the Ambi Valley land parcel of about 600 acres. That should definitely come as a relief, at least as per the reliefs that had been sought by Sahara. And also another interesting development is that Mirak, which of course at one point had a falling out with Sahara Parivar, has also today was represented in the Supreme Court by none other than P. Chidambaram, and has also submitted before the Apex Court that it is open to buying out all 3 hotels. So at this point, all permutations and combinations open for Sahara, and the next 3 months will be crucial for Sahara to realizing these funds. Back to you.
All right, Ashmit, appreciate you joining us with those details. So a 90-day reprieve there coming in for the Sahara Group. Sahara has responded to that breather, saying, and I quote, apart from the mortgage of the 3 foreign properties, the court has also allowed the sale of 10 domestic properties, and Ashmit was pointing out a land parcel of Ambi Valley City, which is on the outskirts of Pune. Sahara goes on to say we're at a very advanced stage with many parties and shall execute these deals at the earliest. We've already submitted 4,000 crore rupees in the Sahara SEBI account, and we shall be very shortly depositing the remaining amount along with the bank guarantee, unquote. So that's the latest there from the Sahara Group.
All right, let's move on from Sahara's tryst with the courts to more news coming in on the government. After much to and fro, the government was still unable to get the land acquisition bill passed in the first half of the budget session. Network 18 now learns that the government is looking at letting the land ordinance lapse on the 4th of April. Shireen, in fact, has been speaking to several people to get us a better idea about the story. So what's happening, Shireen?
So, this was an indication that we got when we spoke with the Finance Minister Arun Jaitley on Friday, and we asked him, are you planning to prorogue the budget session? Because proroguing the budget session is needed if they wanted to re-promulgate the land ordinance. And he said we haven't taken a call on that just yet. So what my sources are telling me at this point in time is, and this is being corroborated by our colleagues as well in Network 18, is that the government is mulling the possibility of letting the land ordinance lapse. It expires on the 4th of April. They are looking at the possibility of letting it lapse. They may or may not bring another ordinance to take that forward. My sense is that maybe at this stage, bringing a fresh ordinance may not be the most preferred option for the government. The government is also looking at perhaps bringing in new amendments, and this could be to address that contentious consent clause. Remember, the most opposition, the vociferous opposition, has been on the fact that the government decided to drop the consent clause. The original bill had a 80% consent clause, and this government had done away with consent altogether. What our sources are now telling us is that consent could be reintroduced, albeit in a diluted fashion. So instead of 80%, it could be about 51%, but no final decision has been taken so far. Also, as far as the joint session is concerned, and this is something that we've been reporting, the government is not really in the mood to call a joint session. For that, remember, the bill will have to be defeated in the Rajya Sabha, and only then will the government be able to call a joint session. And the opposition, in a sense, is really ganged up against the government as far as the land bill is concerned. So the government is hoping that in the interim, because Parliament reconvenes on the 20th of April, they will try and bring in some way of bringing the opposition on board, and that could happen if they bring in fresh amendments, specifically to address the contentious issue of consent, but this is all in the realm of speculation. No final decision has been taken just yet, Sylvie.
All right, so let's wait and watch and see how developments progress from here on. But for the time being, let's move to some other stories we're tracking this evening. The government has announced its borrowing calendar for first half of FY16. Almost 67% of the total borrowings of 6 lakh crore rupees will be completed in the first half of the fiscal, which is in line with market expectations and is expected to help pave the way for the private sector and state governments to raise money in the second half of the next financial year. The government has also announced issuance of long-term bonds of 40 years from the next financial year. FY16 is expected to see a high redemption pressure of almost 1.5 lakh crore rupees, with a large part of it expected to come up for repayment between April to September in the next fiscal. The government has also decided to switch bonds worth 50,000 crore rupees in FY16. Switching of bonds helps the government stretch the period of repayment on its borrowings. Finance Secretary Rajiv Mehrishi says the borrowing would help fund a fiscal deficit of 3.9% of the GDP for the new financial year.
The figure for the first half year is 3,60,000 crores. E-bills for the first quarter are 1,88,000 crores. 88,000 crores. The wage and limit advance for the year will be 45,000 crores.
The huge supply of government paper in the country is one of the major impediments to the growth of corporate bond market. Government borrowing and thereby the supply of government papers are seen to grow unabated year on year. We have seen that government is progressively trying to rein in the deficit at the absolute level, which will put less pressure on the market.
Well, that's the government's borrowing plan for the first half, and it's along expected lines. This is what the street was going with. Now, here's the latest on the government's reform drive. The race to head the State Finance Minister's GST panel heating up. CNBC TV 18 learns the Andhra Pradesh Finance Minister has also entered the fray to head the GST panel. However, Gujarat's Finance Minister Saurabh Patel remains the front-runner for the job. We also learned that the Finance Minister is keen on Jammu and Kashmir's Finance Minister Haseeb Drabu, but the fact that he has little political experience may work against him. West Bengal's Amit Mitra may also lose out given the TMC's volatile relationship with the centre. Sources also tell us that Kerala's KM Mani, the Finance Minister, is out of the race in the light of the bar licence scam that his name has become involved in. So the government clearly feels that Saurabh Patel is the right man for the job, but the Finance Minister is weighing in on the idea of getting a non-BJP Finance Minister on board to head the GST panel. So the final decision, of course, rests with him. But here's the latest in the development in the NSCL case. 3 officials of top brokerage firms who were arrested in connection with the NSCL scam that brought the National Spot Exchange to its knees have now been granted relief. The MPID court hearing the case has granted them bail. Prerna, who was at court today, joins us now with more details. Prerna, so 3 of those arrested from the brokerages have now been given relief by the MPID court.
Well, that's right. All the 3 officials have been granted bail by the MPID court. Amit Rathi of Anand Rathi Securities, Chintan Modi, who is the Vice President of IIFL, and the whole-time Director of Geofin Trade, CP Krishnan, have been granted bail on a condition that all the 3 accused would have to pay 20 lakh rupees as surety and also appear before the Mumbai UOW every Wednesday, and this to ensure that the 3 accused assist the UOW officials with its ongoing probe against the officials in relation to the NSCL scam. Now, Amit Rathi and the 2 other officials were arrested by the Mumbai UOW on March 3rd on charges that they indulged in circular trading, manipulated client codes rampantly, and also enticed NSCL investors with misleading information. Now, the MPID court has granted them bail as it believed that further custodial interrogation was not necessary. Now, the Mumbai UOW will charge sheet the 3 brokers, but is not bound to file the charge sheet within the stipulated time of 90 days. But even as the 3 brokers have been granted bail, the UOW will continue its probe on the alleged role of the brokers in this entire NSCL crisis. Back to you.
All right.
Okay. All right. Thanks, Prerna, so much for getting us those details. Even as the Modi Sarkar pushed programs like Make in India to project India's manufacturing prowess and generate employment, nearly 25,000 workers lost their jobs with the closure of Nokia cell phone manufacturing plant in Tamil Nadu last year. But the Commerce and Industry Ministry is now working out a revival plan for the plant and is considering all options to ensure that the facility is up and running again. Commerce Minister Nirmala Sitharaman today said that the government will not let a Nokia-like shutdown happen in India again, and that the government has met several delegations since November 2014 to finalize a revival plan for the Sri-Perambudur-based cell phone manufacturing facility. Let's listen in to what the Commerce Minister had to say.
The government has looked into the details, and I would definitely say on the inverted duty structure, a lot of thought has gone into it, and we understand the negative impact it has created. And of course, with the Prime Minister himself commenting on Nokia, I'm sure something will happen. And such incidents, such as Nokia, is something on which we are working very hard not to have a repeat.
Well, that's the Commerce Minister, and that adds weight to the reports that have been doing the rounds that there is a buyer for the Nokia facility. The names of a few corporates have been doing the rounds. Remember, the Prime Minister has also spoken about trying to resolve the Nokia crisis, and the Commerce Minister now saying that the government will ensure that a Nokia-like event is not repeated. So perhaps we could see a transaction underway. Over the weekend, the Reserve Bank and SEBI decided on rules for International Financial Service Centres, or IFCS. The first such centre will be near Gandhinagar at Gift City and was first envisaged by Narendra Modi when he was the Gujarat Chief Minister. But as Sapna Das and Nentara Rai report, the Prime Minister's dream of attracting global capital may find few takers unless the regulators and Finance Ministry play ball with all kinds of stops, including major tax breaks.
Activities which will be permitted to begin with, to start with, are activities like opening a stock exchange, and foreign companies can raise money in foreign currencies from there. Even Indians can participate, subject to that requirement of liberalized remittance scheme. So legally, whatever an Indian can take out for investment in foreign currency, that money he can utilize in the IFSC.
The two regulators, RBI and SEBI, are yet to issue a detailed notification on the rules governing IFSCs. But the team behind Gift City, India's first IFSC, is convinced the March 31st deadline will be met. The expectation is RBI will exempt nearly 266 acres, the area already notified as a multi-financial services SEZ, from FEMA rules.
It is a deemed foreign territory. So it's automatically, the FEMA is not applicable in this area as per the regulation, which RBI is going to confirm it. They have assured it, they will confirm. All transactions will be in foreign exchange. So there is no question of capital convertibility.
The insurance regulator, IRDA, is also expected to come out with its guidelines by the end of this fiscal. All eyes now on North Block. Will the Finance Minister allow major tax breaks to make Gift City and other IFSCs globally competitive? Finance Ministry sources told CNBC TV 18 there will be nothing beyond what is already provided for in the SEZ Act. Gift City, on the other hand, argues an effective tax rate of more than 3% will be prohibitive and not attract banks, stock exchanges, etc. to open for business here.
For certain years, the tax structure, there should minimum MAT, if at all it is there. First of all, we requested no MAT, no STT, no withholding tax. So this is what is happening in other IFC.
The other big demand is to have alternative dispute resolution mechanisms similar to the options available in Singapore and Malaysia. With Sapna Das, Nentara Rai in New Delhi.
Singapore's founding father, Lee Kuan Yew, who transformed the small city into a global hub, died today at the age of 91. Yew served as Prime Minister for 31 years and was considered the architect of Singapore's prosperity. He'd been hospitalized for pneumonia for several weeks and was on life support. A state funeral will be held on the 29th of March.